Let's talk earnings and equities with Stephanie Link, Chief Investment Strategist at Hightower and a CNBC contributor. And, you know, Andrew thinks I watch Netflix. I watch CNBC, damn it. And you were on with the judge yesterday, weren't you? And you got, I don't know, you're pulling your horns in on some of these things, aren't you? Because of earnings, the estimates are still too high. Have you gotten less sanguine in recent sessions, Steph?
Well, good morning. I think it's prudent to be more balanced, Joe. There's so many uncertainties. We know the Fed and what they're doing, and we know that the economy is going to slow, and we know earnings are probably going to slow as well. We don't know by how much. And so for me, I've been trying to take profits where I have them, which I think is a good thing to do, and try to balance the portfolio. So I do have some defensives in healthcare, consumer staples, but I also still think that there are opportunities and good values in some of the cyclicals, especially those companies that have exposure to China and the reopening in China. I really feel like we're all sort of ignoring what's going on with the reopen in China. And the GDP came in better than expected. Retail sales came in better than expected. And I think that is going to continue. And that'll be the one bright spot, right? But that will have spillovers to Europe as well. And so I think you have international momentum that is a little bit better than expected. And maybe it offsets some of the slowdown that we're seeing here. So that's why I kind of want to have some exposure on the cyclical side, but I also want to have some of the defensives as well.
That's what I was trying to figure out, how you felt about cyclicals. Yesterday, I thought you were getting less bullish about cyclicals, but you're the ones that could benefit from China. You think you can get some exposure there and maybe minimize the effects of a slowdown here if there is a recession?
That's kind of the way I'm thinking. I mean, if you listen to a couple of the companies that have reported as of late, like LVMH, right? They had 30% growth in China, right? And so I think that the consumer in China is actually probably going to do pretty well. And so that's why I own Starbucks, I own Nike, I own Estee Lauder, I own Wynn Resorts. And by the way, the Macau numbers year to date are running up something like 55% year to date. So I think that there are some bright spots. I think you have to be a stock picker. You got to be careful. I don't want to own China pure plays, but I want to own companies that have exposure there. And I do think that those expectations are still pretty muted. That's like
if you need to know how the reopening's going, you just look no further than Macau, I think. That's a big number.
Yeah.
55.
Yeah. Yeah, and we get Las Vegas Sands later today. So, I mean, we're going to get some data points, and I think the stocks have had a nice run, the gaming stocks, right? But I think they're still down so much on a 2-year basis and from pre-pandemic levels. So I think there are some opportunities there.
We had Peter Bookvar on earlier. He says that maybe the slowdown, a mild recession that could last longer than a deep one, may have already started. If that's true, that has been historically a time to get more bullish, weirdly enough, on stocks, because a year and a half later they're normally higher. Is that going to be the case this time? And are we already in a recession?
Okay, I do not think we're in a recession by any means. I think if you look at some of the economic data, it's actually perking up, right? I mean, we know manufacturing is crummy, right? We see the ISMs and the PMIs, and we see the new orders, right? But yet we got an Empire State manufacturing number this week that was so much better than expected. And I don't really pay too much attention to the regional manufacturing data points. But if you look at shipments and you look at orders and that sort of thing, it was hardly recessionary. If you look at housing, we know housing is weak, but look at the starts and the permits numbers yesterday. They were better than expected, right? Because rates are coming down, and so you have that pent-up demand. We know the consumer on the services side is still hanging in there, and we know the job market is still pretty healthy, even though the numbers are starting to get a little bit squishy, if you will, in terms of initial claims and ADP and non-farm payrolls are starting to climb a little bit higher, but they're still strong, Joe. So I don't think you are in a recession. By the way, Atlanta Fed came out with their GDP number yesterday at 2.5% growth for GDP for the first quarter. So I don't think we're in a recession yet. I do think we're going to slow, certainly in the second quarter and into the second half of the year. It remains to be seen if it's a recession or it's a soft landing. But right now, I don't think we're there.